Hey guys, and welcome inside of this module. Now guys, this module is an update for the module entries and exits. So I got a lot of feedback from the Forex Mastery students stating that they wanted to know more as to how I got into trades, how I got out of the trades, entries and exits, stop loss placements, and all that kind of stuff. So what I've actually done in front of me is I have a list of things I want to speak about. So pardon me if you keep seeing me looking down. Obviously you can see my charts right in front of me. I'm going to be illustrating and demonstrating to you guys how I get into the market, and basically how you should be going about your entries and exits as well. What are the rules of engagement? Rules of engagement simply mean what things do I watch out for, what things do I wait for before I'm able to get into the market. Now, apologies if you can hear some background noise. I think you guys know I live in Dubai now, and right outside I think they're actually, I don't know, I think the gardener is outside probably trying to water the flowers because it's quite hot here. So if you can hear any background noise, please, I apologize for that. But if you can't, sit back and relax and enjoy this module of the program. Now guys, I'm going to kick things off with AUD/USD. As you can see, AUD/USD nicely in front of you guys. So what I'm going to just do is I had a couple of trades that I placed on AUD/USD. So I want to walk you guys through those trades, what I was thinking, why I got into the trade, how I got into the trade. Now, by the time you get to this aspect of the course, you would have already understood some very basic yet advanced philosophies in the market. Stuff like reversal patterns, how to know when the market has stopped trending. Now, if you haven't already got into that aspect of the course, eventually you'll find out. Now, what we do have in front of us here is an AUD/USD chart. And as you can see, I did a simple analysis on this pair. I kind of like envisaged a bearish momentum kind of like forming on this pair. So what I simply saw was a left shoulder head and a right shoulder. Okay, so I saw this form. There was also a massive trend line coming in from many years ago. I'm not going to draw that right about now. However, I could see that this setup was a bearish. Now, usually what I do now, guys, all boils down to the top-down analysis. What I do is very simple and straightforward, right? So I would basically watch out for a setup on a high time frame. So I'll do my analysis on the high time frame. As you can see on the weekly time frame, it's a very basic setup that's happening here, right? So this is a head and shoulder pattern that has formed. All I'm simply going to do is use one of the very basic terminologies in Forex, one of the basic rules of price action, which states that once you break out of a neckline, okay, the market is, once you break out of the neckline, the market is going to reverse. Okay, so as you can see, we were going all the way to the upside, looking pretty nicely done. Everything was looking pretty cool and stuff like that. We got here, left shoulder form. I thought we were gonna rally to the upside. That didn't happen. We stopped here, came and gave it a right shoulder, and then only for me to realize that, hey, this was a head and shoulder pattern that was forming and the market wanted to reverse to the downside. And as you can see clearly, we have broken this neckline. Now, you see, I break down my trading into two segments, right? There's market analysis and then there's trade execution, okay? Now, once I'm done with market analysis, like I have just showed you guys right about now, I have seen that the neckline was clearly broken. Once I'm done with this, then I would scale to the daily time frame to start looking for potential entries. So now I'm done with market analysis. Now it's time to go into trade execution. You have to understand that there are two different things. If you want to learn more about market analysis, the entire course is pretty much about market analysis, okay? Today we're going to be talking about entries and exits. So I just wanted to give you guys some background information as to why I'm going to be getting into this trade, or rather why I go into this trade. And to be honest, this trade, I actually did cut it live on my YouTube channel. Regardless of whenever it is you watch this, the philosophies and the terminologies are still very much valid, and they're going to be valid for many years to come. Even your children will use these methodologies when they're trading as well. Okay, so we've broken the neckline. So I've been able to do my market analysis. Like, the market analysis has fulfilled, it has confirmed to me a direction, which is down here. Okay, now once that has happened and I've been able to see this, as you can see from our top-down analysis, the next major level target is somewhere around all the way down here. So this is how I am able to predict so many thousands of pips into the future, because I'm able to say stuff like, okay, once we break this neckline, I mean, it's not rocket science. Once you look, you can see this is the next level target. So I now understand that I have this entire space. You get what I mean? I now understand that I have this entire space for me all the way to the downside. So I have all this room to play with. So once the market has confirmed to me a particular direction, and in this case it is bearish, the only thing I'm going to be thinking about at this point is looking for selling opportunities. Now, my entry and exit strategy is pretty accurate, but the honest truth is I have also used other people's strategies that they failed to become profitable with, and I still use their strategies to make a lot of money. Why was this the case? Because my market analysis was top notch. Once you're able to identify directions in the market, how you get into the market isn't really that much of a big deal. A lot of people stress about the entries and exits. Oh my God, they're worried. But the truth is, you find out that the strategy that most people are actually using at this time can actually suffice once you get the direction correctly. Because think about it, at this point, the only thing we're thinking about is looking for what selling opportunities. So all you need to pretty much do is, when your strategy tells you buy, don't buy. When it tells you sell, sell. Because the market analysis has confirmed a bearish direction. I hope I'm making sense here. Anyways, that's not why we're here today. I want to show you how I get into the market and how I like to trade the market, right? So once we're done with the whole market analysis, I will then scale down to my daily time frame, okay? Now, one of the very first entry strategies that I found to be very profitable for me is something called the counter trend line break. Okay, now if I was to enter on a higher time frame, a lot of people they kind of like misunderstand me when I keep talking about trading or doing analysis on higher time frames. I don't trade on higher time frames. I only analyze on higher time frames. If I was to trade on higher time frames, I will be getting into some very ridiculous trades whereby my stop losses would probably be like 600 pips. No. We want the higher time frame to confirm a bias. That's it. We want the higher time frame to confirm a bias to us. Confirm to us that yes, indeed, we're heading in this direction. Confirm to us that yes, indeed, I want to head lower. Confirm to us that yes, indeed, this is exactly what I want to do. And as you can see, the market did that right about here. So what do I do next? To start selling here is late. What I like to do is I like to wait for the pullback. And I don't also trade inside of the pullback. I trade the bounce. And also, so the very first strategy is known as the CTL. Okay. Counter trend line break. It's my favorite thing to trade. Okay. So in this case, and guys, don't worry, I'm also going to show you situations whereby it didn't work out properly, situations whereby I didn't trade it, situations whereby the whole setup was invalidated, so that you guys know exactly what to do, what to look out for. So the first one is counter trend line break, and as you can see, the market pulled back, we pulled back into here and we bounced. Because guys, trust me, the reason why, you see, the counter trend line strategy is the method, the reason behind it is actually so simple and straightforward, right? The ideology behind it is very simple. You see, the counter trend line is there to protect me from getting into premature trades. Well, actually, before I get into that, why do I like to wait for the bounce? Because this market can just start going all the way to the upside. A lot of people get trapped at selling at support and resistance. In this case, people like to sell at resistance. In this case, you would have made money. But 8 out of 10 times you will lose money, and I'll show you in the case of GBP USD when the market actually got here and carried all the way to the upside. So first things first, in the CTL trade, we like to wait for a bounce, and then I like to see some bearish confirmation. Now this is where you guys want to pay attention to this, because we're on a daily time frame. As you can see, I can't really draw a counter trend line here. So if you're trading and you can see a setup on the daily time frame, but you can't really see the waves form properly, feel free to then scroll down to a 4-hour time frame. Now you notice that on the as you can see, it's a lot of. Now as you can see on the 4-hour time frame, this is still the same thing. Now as you can see on the 4-hour time frame, we can see very clearly the waves of this market. On the daily time frame, it was just looking, just candles. You couldn't really find a counter trend, a way to draw a counter trend line. Now you can then go ahead and draw your counter trend line pretty nicely, and this is exactly how I got into this trade. So how do you draw your counter trend line? It's very simple and straightforward. You want to draw it like this, connect the bottoms like so. So first things first, we wait for the bounce, and then as you can see, a clear break of this 4-hour candle close. I repeat, 4-hour candle close. What did I say? 4-hour candle close on the break of the counter trend line. I'm just going to show you guys properly. 4-hour candle close. Now, why don't I use the 1 hour? In this case, I got into this trade about here. Okay, at 0.755, somewhere about here. 4-hour candle close. My stop losses are here. First level targets are here at the 100% retracement. Okay, why do I use a 4-hour candle close? Because with a 1-hour candle, you're subject to a lot more fake outs. You have to understand that lower time frame traders like to trade on lower time frames. All the algorithms trade on lower time frames. Everybody is trading on the lower time frames. There's a lot of noise. You see, the reason why I don't really like scaling down to 50, I can trade these ideologies work on lower time frames. You can use this on a 15-minute time frame. Whatever entry strategy I'm teaching you guys, you can use it on a lower time frame. But let me explain to you my reservations about lower time frames. My reservations about lower time frames is the fact that there are too many people trading day in and day out. Now, once there are too many people trading day in and day out, there's too many biases. So at one point the market is dropping, at one point the market is rallying, at one point the market, so there's a lot of zigzag, there's a lot of fake outs. You have algorithms trading, you have bank traders trading, you have hedge funds trading, you have everybody trading those lower time frames, you have retail traders, you have a lot of noise, and then you have the market manipulators heavy on lower time frames. So, if you have a strategy that works very well on you and for you on lower time frames, lower time frame, feel free to use it. But over the years, I found out that it only made me have high blood pressure. It only made me stressed out. It only made me sad. It only made me lose money. Whereas if I'm executing on a 4-hour time frame, for a 4-hour candle to close, it means that shit is solid. Why does it mean it's solid? Because it means that it has filtered out all the noise. It takes 4 1-hour candles to form one 4-hour candle. I'll take that again. It takes 4 1-hour candles. Okay, it takes 4 1-hour candles to form a 4-hour candle. So if a 4-hour candle can confidently close, that means over the last 4 hours of all those 15-minute jumps up and down, or those 1-hour jumps up and down candles, for a 4-hour candle to close, it means it has filtered out all the noise. And yes, indeed, the market wants to, close below that certain level. That's why I like to trade on these time frames. It just helps me filter out the noise. It's not because people keep bashing me like, oh yeah, you keep talking about market manipulation on lower time frames, but it also happens on higher time frame. The only truth is, if it's going to happen on a higher time frame, the chances of it happening is very slim. You are prone to more market manipulation on lower time frames because that's where everybody's trading, and there's a lot of confusion. Everybody's trying to trade that. It's a lot of mess, it's a lot of headache. So I don't like to deal with that. If a 4-hour candle closes, I like it. If it closes, it's here to stay. Okay, so that's pretty much the entry. A 4-hour candle close, stop losses must come above here. First level targets must be here. Now, why must my first level targets be here? My first level targets must be here because the market has a tendency of coming into previous support and bouncing. Okay, and I'm pretty sure that happened in this case here. So you can see the market touched it, and as you can see, the market, okay, we touched it, came down a little bit, and as you can see, the market started to rally all the way to the upside. So think about it. If you didn't take any profit here, by the time this market started to push all the way up to the upside back into your entry, and don't forget our entries are about here. This is exactly where our entries are. 4-hour candle close. And another reason I like to trade 4-hour candle closes is it gives me time. I can be driving, I can be in a meeting, I can be working. A lot of you guys have different things you're doing in your lives. With a 4-hour candle, you know that, okay, I've seen this setup at by 12. It has broken the counter trend line by 12 o'clock. I know that I have till 4 o'clock to get to my desk. You have 4 hours. Definitely you'll be by your desk in 4 hours. And then you get to your desk and has it closed? Yeah, it's closed. Jump into the trade. Anyways, back to what I was saying. So just imagine you're in this trade and then the market starts to pull back the way it's pulling back like so. And you didn't take out any profit. By this time, you're like, by the time you see this, you're hoping, okay, it's going to keep going lower. DAPO Willis says the overall target is all the way at the bottom. That's what. And then you see this. And you see this. And you see this. Oh, shit. And you see this. It's getting back into your entry. It's getting back into your entry. It's already back into your entry. Now you're back in negative. All of this starts to mess up with your mindset. You see, guys, nobody taught me this. I didn't read a book. A mentor didn't teach me this. The market taught me this. All the things I preach about on the course, the market teaches me things by taking my money. Okay? The market teaches me things by, hold on guys, let me check something. Sorry guys, I'm back. So, you know, the market teaches me things by taking my money from me. Imagine being in all this profit and then before you realize you're back in negative. It starts to affect your emotions. And the number one thing I always like to protect when I'm trading is my emotions. I don't try and put myself in a situation whereby I am scared. I don't like to put myself in positions whereby I'm panicking. I always like to stick by the rules and protect my mental space, because the truth is, once you start to fear, or the moment you start to be afraid, or the moment you start to be greedy, you've already lost. I know you've probably heard this a couple of times, but the moment you start to feel the emotions come into the game, and it's so simple, it's either you're feeling greedy or you're afraid. That's the market, okay? And in this case, if I didn't take out a portion of my trade here, I would have been scared. Okay, I'd have been scared. And once emotions come into the game, you start making horrible decisions. And by the time the market had gotten here, don't forget your stop losses here. By the time the market had gotten here, you would have what most likely closed out. You're like, okay, let me cut my losses at this time. And look at what happens. The market comes back down. Okay, so once again, counter trend line break, 4-hour close, first level target, 100% retracement. Now, this market continued to move sideways. I was monitoring it very closely. I was monitoring the market very closely, monitoring the market very closely, and then I started to spot something very interesting. Around here, I noticed that the market had consolidated, okay? That the market had consolidated and had pretty much given us another room for us to draw a counter trend line. Now, for this case, I wasn't really comfortable with this trade, so I didn't take it, okay? I left it and I said on the third trade, I was going to take the third consolidation, okay? Guys, I don't take a consolidation trade inside of a consolidation. I don't do that. I wait for the market to break out from lower lows and lower highs before I start looking for more trading opportunities. And then I was watching the market, it was coming down. Don't forget, guys, I'm still holding this, my trade. Back to what I was saying, right? So we have fallen all the way to the downside, and then I start to see the market start to consolidate again. Now, this is now looking like the third consolidation in the market, okay? The third consolidation in the market, third one. This is the first one, this is the second one. The third one is the one that always does the trick. So at this point, I'm watching. The market starts to pull back. Now, I know a lot of you guys will be thinking, why are you not drawing your counter trend lines here? Why are you not drawing them here? So what tends to happen is, I like to look at previous consolidations and pretty much gauge how many candles formed and how big was the consolidation before I start to get excited. The way this market consolidated here, I still felt like there was still room for further retracement. And if you look carefully, now we're talking structure. Okay, at least let us come. It's still a bit too far from structure. Let it pull back into, you know, some form of structure. Okay, because I don't want to get into any premature trades. And as you can see, if I'd sold here, I would have gotten into trouble. Okay, so what I usually like to do is I like to look at previous ones. I know a lot of traders have probably tried to draw it like this, start selling, but the market just isn't ripe. Always look at previous consolidations. Never be in a hurry to draw your counter trend line. Be patient. Be patient, especially on the first and third bounce. Especially on what the first and third bounce. So as you can see, we have finally tapped that level, and then I now start to feel very confident with this. Why? Because the market has confirmed something to me. Yes, indeed, we have pulled back into this level. This consolidation is looking equally as big as this one. Now I just simply carry my counter trend line. Now I can draw it because now I feel a lot more comfortable. Never be in a hurry to get into trades, guys. Okay, and at this point I feel a lot more comfortable getting into the market, and then the market is, now you can see, is bouncing up of the counter trend line. And this is why I keep telling you guys, draw your counter trend line on the wicks. If I had drawn this thing too close to the body, I would have gotten into a premature entry here. Draw them on the wicks. Okay, as you can see, we've gone in for another bounce. At this point, I'm feeling very happy, very confident, because once the market starts to play ping pong on top of your counter trend line, and you have, this is almost looking like a breakout, like a wedge. I like to see stuff like this, okay? Because I know that once this market eventually breaks out, it's going to be a lot of pips for me to catch. And I already know that this is a third consolidation, so there's no way, I know for a fact, this one is going to be a winner. As you can see, we're still playing around it, and as you can see, this consolidation is looking quite big, looking quite juicy once we break out of it. But guys, still at this point, my previous trades have locked in some profit, because at this point we could still rally all the way to the upside. But at this point, this is where you hear me say I'm favoring the downside, I'm favoring the downside, I'm favoring the downside, I'm favoring the downside, favoring the downside, right? And as you can see, we now finally have that break we've been waiting for. So if I just move this a bit, and as you can see, 4-hour candle close right about here. I didn't scale down to what, because the 1 hour time frame I would have gotten in earlier here, but I don't care. I'm not in a hurry to get into the trade. I must wait for the 4-hour candle close. Where do these stop loss come? They come above previous highs. If you try and play yourself by trying to put your stop losses too close to the market, or like, I don't really want it to be that high. The strategy is, I know the strategy, my strategy is correct. I know it's correct, but so my stop loss, let me just not put it, or let me put a high lot size. I know that it break. I mean, this strategy always works. It's always that time where you try and play a fast one on the market that you eventually get stopped out. So anything to protect my mental space, once again, anything that will make me place this trade and sleep peacefully is exactly what I'm going to do. I'll take that again. Anything that is going to make me place this trade and sleep peacefully is exactly what I am going to do. Okay, I don't care how little of pips I catch between my entry and my first level target, because this is always my first level target. I always take out something. Okay, I don't care how little, maybe it's a 1-to-1 risk to reward. I don't care. No matter how little it is, I will always take out something here. No matter how far this breakout occurs, I'm always going to wait for a 4-hour candle close. And as you can see, the market plays around. Now, look at something that's happening. When we did break out here, I was in all this profit, and then before I knew what was happening, I was back at break even, and but now back in negative. Now, because I knew that my stop losses were above about here, my risk was at 3%. I wasn't scared. At this point, most people are like, the market, this market, again. Maybe this first trade didn't work out for you. You've been patient, waited for this one. You're like, you know what? Let me just close this trade out for a small loss. You have to wait it out. You have to wait it out. This is why I say when you get into a trade, close your computer and go and spend time with your family, because all this rubbish is bound to happen. All that actually happened here was the market broke out. This is a breakout retest continuation. This market simply wanted to test the outer part of this counter trend line. And as you can see, it took a couple of days for us to eventually get to the first level target. Okay? To eventually get to the first level target. Now, we've hit our first level target. Overall targets are supposed to be all the way at the bottom here. Now, usually 8 out of 10 times we'll get to our overall target. Okay, so I'm holding down for the market to collapse all the way to the downside. Now, another thing I want you guys to take note of is something very interesting. I don't monitor my trades on a 4-hour time. Now that I have 2 trades open, what I then do is I then come on a daily time frame and I simply watch only the daily candles. Why? Because if I'm monitoring my trades on a 1-hour time frame or a 4-hour time frame, I get to see all the ups and downs. I don't want to do that. I like to see how the daily candle closes. So it's the daily candles that will actually tell me if there's any danger or anything of that sort. I only like to monitor my trades on only the daily time frame. So now let's go over to the daily time frame. So we've spoken about how I've gone into the trades. As you can see now, look at how those entries looked on the daily time frame. On the daily time frame, you will never have been able to get in here. You will know. But the 4-hour time frame gave us the wicks, gave us the candles, gave us the exact breakout candle, gave us a concrete breakout candle. Okay, even for this other trade that happened about here, the daily time frame did close about here, but the 4-hour is always the best. I found out in my own many years of trading. Now I'm gunning at this time. I'm locking in profit. I'm gunning for at this point now. I'm gunning for this overall target. You hear me call it. I have very bold claims. I'm calling this market here. Why? Because my key levels are about here. However, I'm watching this market. Good. Now this happens. Let me explain something to you about this market. If for any reason you're in a trade and on a daily time frame you see a bullish engulfing candle form whilst the market is heading down, this is the time for you to tighten your stops. This is the time for you to lock in as much profit as you can. As a matter of fact, at this point I was already closing out majority of the most recent trade. Understand this, guys. Before I entered this second trade, I made sure that this first trade was risk-free. A lot of people are asking, sir, what do you mean by transfer of risk? Simple. If I get into this trade, my stop losses are here. By the time the market makes me all this profit, I've locked in some money and then I've moved that stop loss into positive region, meaning that this trade is no longer risk-free. I've made a lot of money, blah, blah, blah. Then before I can get into this trade, meaning that the first trade has to be risk-free before I get into this trade, meaning that at every given time, my total risk is only limited to 3%. That being said, now that I'm in this trade, so I was holding on to both trades because I was milking. It was a fantastic, situation that was going on. I was having a lot of fun. The market was making me all this money. I was watching the market very carefully. I was watching the markets very carefully. I was watching as things were unfolding and stuff like that. And this bullish engulfing candle came just shy of this level about here. Now we're going into exits. I don't want to use this to paint a very good, story and understanding, rather story/understanding for you guys. Now, once I see a bullish engulfing candle form, it starts to show me signs of worry. So my most immediate trade that I have usually placed that is very close to the bullish engulfing candle is the first trade that I start to close out positions from. So I think on this I probably had 2 trades, 7.5 lots, 7.5 lots sell. So at this point I really started to, first of all, close that one. closed that one, and then I started to move the stop losses down, further down, and as you can see, the market did pull back and stop me out for a lot of profit, right? Now, why do I pay attention to this? I pay attention to this because for a bullish engulfing candle to form about here, it means that there's actually danger. Bullish engulfing candles on a daily time frame against a trend signifies danger. Doesn't necessarily mean that we're in for a trend reversal, but it simply means that you want to tighten up your pants. So what you can do is this. By the time I exited most of my positions by the time I even started to see all of this, I was already closing out most of my positions. And as you can see, these are daily candles. I wasn't acting based on impulse 1 hour. I was waiting for, if a daily candle can close green on day 1, green on day 2, green on day 3, there's a problem. Okay, guys, there's a problem. Okay? There's a freaking problem if that happens. Okay, so, and as you can see, this started to happen. Sorry, guys, today I'm a bit tired. I actually just coming from the gym. So as you can see, this happened and the market started to pull back. So in my mind, what I'm thinking is we still have room to the downside. What I'm most likely going to do in this situation is I would simply close out all my positions and then wait for potentially another formation. This is now looking like a pullback like this one. If you can see, this looks very familiar to this one, right? So I'm now waiting for a pullback. Maybe I can take advantage of another trade and then drop it on his head to the downside. But I'm not taking any chances. I'm first going to keep what the market has given to me and then see if maybe potentially it might give me another opportunity to jump in. But that's my backup plan, okay? Jump in, take out my money, let the market find its bearing, and then I can jump in if I see another opportunity presents itself. However, the market just kept on pulling back. So at this point, I close everything else out of the market. In fact, by this other daily candle, all my trades were closed. Now I start to see, now this is where I want you guys to pay very close attention. Maybe I should break this into 2 parts. Part 1, part 2. No, I'm just gonna, should I? Maybe. If for any reason the video stops, because I don't want, when people see the timing looks very long, they usually phase out. But I might break it down into 2 parts. So I want you guys to understand something. And this is something that I just made a very recent mistake about. It cost me $75,000. As at the time I was recording this video, I had just taken a loss on the market. And I explained to you why I did take the loss. I'll explain everything. I'll explain the good sides of the strategy, the bad sides of the strategy, so that you guys understand how to come back from it and stuff like that, right? So, you see, something about waves that you guys need to understand is when a massive breakout happens like this, usually 3 significant pullbacks will occur. By the 4th pullback, the market is actually pulling back for something, a bigger retracement, which, as you can see, the market started to do here. So by the 4th pullback, the market will pull back significantly. I'll take that again. First retracement, second retracement. This third retracement is always the best. This is the sweetest one to trade. Okay, this one gives the most vigor, the most juice, the most everything. Yada yada, blah blah, say blah say. You know, it always looks really nice. Okay, but by the time the third one is done, actually, if you watch the first video on entries and exits that I published on the course, I made mention that the 4th one is always, I had always already known. In fact, it's part of my rules. But for some strange reason, I didn't count them properly. I was too excited about the AUD/USD, and I was a part of me was very confident about 0.700 as being the overall target. So I was like, you know what, this is the 4th retracement. It didn't really even occur to me that it was the 4th retracement. I was like, you know what, the market has gone in for a bigger consolidation. Now, before I even get into that, the 4th one is always a bigger pullback. So the reason I want to mention this is because if you see a bigger pullback like so. Don't be quick to start jumping into buy trades. Don't be quick to start saying is a change in trend. No, usually the market will pull back a little, one, little, two, little, three. By the fourth one, it will pull back for a bigger move. So these are all Fibonacci moves, A, B, C, D. Okay, these are all Fibonacci moves, A, B, C, D. These are all Fibonacci moves, A, B, C. So it's all doing all these small pullbacks, small pullbacks, small pull. But then the market now comes in for a bigger pullback, like this, for a bigger retracement. So this is now the A, B, C, D. Hope I'm making sense. Small pullbacks is the little one we've been trading. That's why we went to the 4-hour time. And if, for instance, on the 4-hour time frame, everything's starting to look very big and the market is just everywhere, simply go to a higher time frame. Always, if you're if the time frame that you're on at the moment is looking very complex and complicated and the pullbacks are looking big, and all you need is a very simple thing: go to the immediate time frame higher than you. If you're on a 15 minute and you're confused, go to 1 hour. If you're on 1 hour and you're confused, it always compresses everything, condenses everything, and ultimately simplifies everything. So if you're trading pullbacks and for some strange reason you see a big pullback, doesn't necessarily mean that the trend is about to change. The market might just be wanting to consolidate for a bigger pullback, because at this point the market, if I went on the weekly time frame, it's all red candles, single reds, and the market is looking too linear. The big boys need a bigger consolidation, so the market will eventually consolidate back into somewhere around here. So what I'm trying to, the lesson from this is, don't be shook when you see when you may be trying to jump into a sell trade for a small consolidation and it's not working out and you panic. No, allow the market consolidate, give it space. And as you can see, the market pulled back and it was time for us to go again. Jumped into, that was a mistake. Jumped into another sell trade. As you can see, the market started to give us all these amazing pips. Everything was looking very nicely. We were expecting to come all the way down here, at least to the 100% retracement, and then all of a sudden the markets came very shy, and all of a sudden the market just went ballistics. Now, this fourth trade, I'd like to have you understand that from here all the way to this point, I probably made about 19% return on investment. From here to here, the combination of these two trades, I probably made about 30% return on investment. On this trade that I lost, my stop losses were negative 3%. So I'd already made all this money from AUD USD. So the market taking this money from me, it didn't really bother me that much, but I like that it happened, because I actually, right after this loss happened, I transparently came on YouTube and then I announced something on YouTube that, sorry guys, announced something on YouTube that, we had just hit a loss for the first time. I think I'm the only Forex trader who came on YouTube to speak about losses, okay, because losses are huge. But as a matter of fact, I'm going to do a whole module on Forex Mastery course about losses, because they're very important. A lot of traders get thrown off balance. As you can see, I'm also showing you when I made money with strategy and when I lost money with strategy, so that you understand what to do and what not to do. Now, what could I have done differently in this situation? In hindsight, not much, because our rules state that once we need to wait for the market to come to the 100% retracement before we take out some money and then ultimately move stop loss break even. None of that happened. The market went to stop me out. What should I have done differently? Really, I should have counted the waves properly and known that this was the fourth retracement. So if you missed the first one, you're good for the second one. Third one is always the juicier. So you feel free to, you can test the first retracement. You can sit on your hands and watch to see how it happens. If it forms nicely, then, and it happens, jump on the second one. Always know that the consolidations are going to look very similar, okay? The second one, you can jump on the second one. If you're being very conservative, the third one always does the trick. Just relax, draw your lines properly. 9 out of 10 times it will make you money. 9 out of 10 times, especially once you get the direction correctly. But the fourth one is always the mad guy. You know, I did know this. I don't know what happened. I was just carried away. I think I just wanted to give a trade call for everybody to trade, and then eventually it ended up coming to bite me in my ass. But that's absolutely fine. So, you know, that's one of the exceptions to this strategy, okay? For our fourth swing, fourth retracement is always going to be a headache for you guys. Sometimes it works out, but the probabilities of the fourth swing working out is about 60%. I've made money from the fourth retracement, don't get me wrong. However, the possibility of it working out is about 60 to 70%, but the possibility of the third retracement working out is almost 99.99999%. You know, so I thought I'd just throw that in there. I hope I'm making sense to you guys. So, yes, so I'm going to cite some more examples. I think I'm going to divide this into 2 parts. So we're done with AUD USD. We've been able to see the entries, exits, why I got into trades, why I got out of trades, how I got into them, candle closes and stuff like that. So let us go over into some part 2 where I speak about the exceptions to, or exceptions, meaning reasons why I can see a setup like this and still not get into it. So we're going to go into exceptions into part 2, and I'm going to speak about a couple more examples in part 2. I'm also going to speak about another strategy in part 2 as well. So guys, let us go. Just click the next video. You see me in the next video.